Good morning, good afternoon, good evening. It's Taylor Watts here from Watts Investing, and today we're doing our usual monthly challenge video where we put in $1 per subscriber into Triple M, our subscriber growth stock, and our dividend growth stock in general. And today's a really good time to buy because it's down 6% on our average cost basis, so we're actually really excited to put some money in there. And this year I've decided to add a new kind of rule or incentive for me to follow for the subscriber challenge kind of thing. So for every video I make this year, I'm going to put in $25 into Triple M as well. So since I've already uploaded 2 videos this year, and this will be the third, that'll be $75 into Triple M. In our last video in December, in January, about December, we had 280 subscribers, so we haven't actually gained 1 subscriber since that video, so no money from that, but we will put in 75 from that new kind of rule set that we're adding in, and that is just to incentivize me making more content and also just increase my holdings in Triple M closer to where I want to be, because the only time I invest is from the challenge and the dividends, so I'd like to be putting in a bit more, and since I'm not getting as many subscribers as I'd like to invest into Triple M, I decided to add another incentive around the YouTube to still kind of have it along the same lines. But aside from that, thank you for everyone who tunes in every month, and we'll get straight into the portfolio update and then go over the January dividends for the month. So our portfolio hasn't really done too much since the past video, so we uploaded it back in mid-January, and it's pretty much at this exact same 18,000, early 18,000 number. It's had a bit of a dip in relation to some broader market stuff, but it's been pretty steady for the past month. There's been obviously a dip in AT&T, Triple M, our global 100 kind of holding here had a big dip. Fish and Paykel dropped quite a bit, Colgate a bit. The S&P 500 had a mad dip, so we bought some in there. And Microsoft had a bit of a hit as well, so we bought some down there. Just pretty much most of the American stocks had a big drop around the same time, around that broad news, so we kind of just started buying in more and more. Tesla, as it started dropping from its 1200 down to the 800s, we started buying more and more. And some super cool news about this money that's actually in my wallet, about 450 New Zealand dollars, came from another investment we did in the past that I'll be making a video about very soon. So it's pretty cool. It's my best investment yet that's been sold, and super excited to share that investment and its entirety. A few other portfolio changes. We've been selling out of our New Zealand kind of communications and like internet service companies, as the US market dipped and some of the New Zealand stocks, I decided that those ones I've been planning to sell for ages whenever like SpaceX or Starlink IPOs, but because that market drop was more than I expected for around that time, I decided to sell out of them while they were up, to kind of utilize that lower cost basis that I could get. And so Meridian Energy is another one that I'm selling out of. I was going to sell it a few days ago, but it did drop a bit here, so it was actually negative, so I just decided to wait, and now it's back up in the positives. And I was thinking about waiting for the dividend, but it didn't really make much sense, so I just decided to sell today, but today's a holiday, so we're going to put that money into Tesla and Apple and all the sorts. Other than that, we've just been dollar cost averaging into all these companies as they dropped, and Visa had a mean drop here and here that we utilized, and now it's bounced back up, so we've got some of that. Disney is still on the low, so we're just averaging down as it drops and just averaging down more and more. Certainly looking to grow this position while I can when it's down that much. And then Westpac, we've just done the odd one as it drops as well. And so that's the Sharesies portfolio, looking spick and spam. And our one on Hatch, obviously nothing new. We haven't bought anything since middle of 2020, and it's just all Tesla stock. So it's gone down recently over the past month. It's gone down $500-600, but that's fine. We're not worried about that in the short term, and that's that. So we are now going to look at our dividends for January. So we essentially got $6.31 for the month of January, and that was just from Pepsi, Realty Income Corp, our US bond fund monthly thing, and the global covered call 100 ETF high dividend monthly one as well. So just 3 monthly ones, and Pepsi is what we got in January, so that's $6.31. So that's kind of just being consistent with our average dividends received, keeping it pretty much the same. And yeah, total dividends over time is just getting more and more closer to halfway to 1,000, which is pretty sick. But yeah, we'll put that number into here and get in our first number for the year, and get in our Q1, get in our 2022, and yeah, just really see these staircases of year by year growth really start to kick in. It's going to be super cool to see February and March and get more consistent numbers across the broader range. Hallensteins will still be mucking up these staircases that we've got going on with its massive dividend that is kind of whenever they decide to pay it. But over time it'll become less and less significant, and we'll get a bigger that's one thing I wanted to point out, is we'll get a nice baseline here of like our minimum dividends received on small months. It's sitting at like $5 or $6 is the lowest we've received in like over about a year. So that's super cool to see that baseline growing with those monthly stocks and the quarterly ones. And yeah, so we've got that first number in, kicking off Q1. We're obviously hoping to get Q1 way bigger than Q1 of 2021, so getting that year-on-year growth on our dividends, kind of like a company's earnings report. But we'll also be looking to get quarter-on-quarter growth in the years to come once we do get that more consistent, broader dividend base than just Hallenstein's being our main one. So yeah, our total dividend goal for the year was announced in my other video, and that's going to be $333. For last year it was $222, and we got so close. But yeah, we're going to aim for 333, quite a big jump, and I don't know if we'll even get close, but it's something I'm going to strive for. So I'm going to really focus on getting those dividend investments down. As yeah, I've put plenty into Tesla and still plan to, but we do want to get that dividend growth compounding over the years and get that snowball rolling down the hill. So that is the... Oh, actually, got to show the guesses for the month. So our total was $6.31. My guess was $7. We'll see if anyone beat me. So we've got Project Frugal at $9.99. We've got Ezra Wilson at $12, and we've got Patricia at $10. So no one is beating me this month with smashes, and we were only at 69 cents off. Not a bad guess for us this month. And for February, we'll be guessing somewhere in the mid 10s to 20s, because we do have a lot of companies paying, like Microsoft, McDonald's, Apple, maybe Triple M, lots of those American ones on February, and of course the monthly ones, which will be at around a $5 baseline anyway. So my guess is going to be $16, and we'll add some random cents in here. We'll go for 48. So we'll go $16.48 for February. If you guys want to get in on the guessing game, just feel free to hit the comment section up and leave your guess in the comment section. And if you beat me, I'll give you guys a shout out, depending on if you've got a YouTube channel, you make music on Spotify, you got a podcast, whatever it is, I'll give it a shout out if you beat me in the guessing game. And yeah, really give it a go. Try kind of look at what stocks I own, and maybe do some background research, see what one's paying in February, and yeah, try kick my butt essentially. But yeah, we updated the weightings chart fairly recently, so we're still sitting at around 40% Tesla, right on the money, 10% Apple, 5% Hallenstein, so pretty tidy numbers almost. And our staircase is, everything's slowly moving up there. We've got our S&P 500, just broad kind of diversified one, sitting up nice and high as well. And we've also got another one down here paying monthly. And our portfolio at market, including Sharesies and Hatch, is sitting at 21,000. Not bad. I think we had it at just over 22 at the highs of the market. But yeah, just looking to grow that over time. And we're not really too fussed on the actual value growing too quickly, as we want to get as much lower baseline investments in as we can. Dividend Growth, still working on a video, planning on showing this off and kind of talking about it and removing the companies that I no longer own, like Trustpower. And yeah, we're gonna set up some new share goals as well. So we did aim for 6 shares in 2021 and got super close. This was about 5.7 at the end of 21, and we hit our goal of 8 shares in Apple. We got 8.2, and then shares in Triple M is just channel related, so we might update that to be based on how many videos we expect to make, and then the subscribers to grow around that. So these ones, kind of ignore them for now, they're just random. But we added in how much we've invested, what our goal is for the end of the year, how much we'd roughly need to invest per week, and how many weeks is left. It's probably 46 now, and that is super cool. And one thing we added in is Sharesies has that new goal feature, so we set our goal to be roughly the number of money we need to invest to hit our goal, and we're already at $800, so we're well on our way. And yeah, so you'll see that there's 2 or 3 quite big top-ups here. These 2 were the $450 I was talking about earlier, all on the same day, and that's from another investment that we did in the past. And you'll see here that I recently did a cancelled market buy on Triple M, because it's my second time recording the video, because I did muffle up a little bit and make it a bit too long, which this one will probably be around the same length, because I just like to blabber on about my numbers and colourful graphs and stuff. But other than that, we've kind of not done too much. We've just got our general net worth and different types of debt, and our kind of just different bills, and just putting numbers where numbers can be, and just kind of visualizing what's going on. And net worth over time has kind of been going all over the show, depending on whether I've got a car, whether I'm paying university fees. And then it's going to start over here is when I paid my bond and started paying rent and stuff, so it's going where. And then got a full-time job, so I started paying back some of the loans at the minimum amount I kind of can, and also just investing a little bit of that disposable income. So hopefully we'll start dragging this towards maybe 15,000 over the next few months. And yeah, that's pretty much our portfolio update, our subscriber challenge. Yeah, my guess for February is $16.48. Leave your guess in the comment section below, and I'll catch you guys in the next video talking about our successful investment, how we got that $450 into Sharesies, and possibly another video talking about that dividend growth, our portfolio reshuffling, and everything like that. Cheers guys, happy investing.